Hello, those who are online, good morning. Am I audible to you?
Yes, sir.
Yes, sir. Yes, sir.
Yes, sir, you are audible.
Okay, so these three elements of accounting we are going to study in some limited manner. Okay, so what are those things? I am just displaying it. I think, is it visible for you? Those are online. Screen is visible?
Yes, sir.
Yes, sir.
So the first unit is introduction to accounting. In this, we are going to study about the basic introduction, meaning, academic definition of accounting. Okay, and then branches. Just now I told you the branches of accounting. Okay, cost accounting, management accounting, and then financial accounting. And then what is the objective of accounting? Objectives of accounting. If I say objectives of accounting in the first unit, it's about objectives of financial accounting. We go in this order: financial accounting, management accounting, then cost accounting. Just one layer of understanding of these three branches. Financial accounting deals with recording of business transactions. Okay, management accounting deals with analysis of financial data so that we can get some deeper insight about the business organization to make some decisions about the business. Okay, that's called management accounting. It's study later also. Just one line of understanding. Then last one, cost accounting. Cost accounting deals with the ascertainment of cost and control over cost. It's mainly for manufacturing and service oriented companies. Cost accounting is very important for, significant for manufacturing companies as well as for service oriented companies. Okay, basically, if you start a business or if you work for a business, the business can be of broadly three categories. It may just produce something and sell, buy raw material. Is it clear? If I pronounce any words which is not understandable to you, please stop me. Okay, because those who are not from accounting backgrounds, you may feel that this word is new to you. If that's the case, please stop me that time and you ask me, sir, this the technical term I could not understand. Okay, so that it is easy for us to make you to understand. Okay, so a business can be a manufacturing business. It buys raw material, it processes, and it sells it. Finished goods. The other business may be a just merchandising business. First one is manufacturing business. Second one is merchandising business. What is merchandising business?
Just trading.
Trading business. Buying and selling. I buy the output from some manufacturer and I sell to my retailer or maybe another wholesaler. Okay, I'm just a mediator. I just buy, don't process anything, keep it as a stock, I sell it, display it and sell it. That's all. That's called merchandising business or trading business. It's all no words. The third one is service business. I neither produce anything, not just buy and sell. Rather, what I do, I just render some personalized service. Doctor, hospital, okay, lodges, restaurants, okay, IT companies. These are all service-oriented business organization. So, business entirely in this world, any company you take for that matter, any business organization you take for that matter, they have to do any one of these three or the combination of these three. All right. TCS. But yeah.
Service oriented business and the outsourcing business.
What is outsourcing?
Suppose I need to.
Not necessarily to me. Suppose I am a manufacturer of notebooks. I can do it in my own premises, or I can give it as a job work to somebody. I can outsource. Outsourcing is the term used for how do you perform your business activity. Outsource. Suppose there is a university is conducting this program called EMBA, executive MBA. Okay, they are deciding the curriculum. They are deciding everything. Okay, how many hours are required? What are the subjects to be taught? What are the content to be there in that? Everything they are designing. The execution process, when it comes to execution, they may just outsource it also. Possible. They can give it to some of the educational institutions. So you just carry out this, you just execute it. You just plan it out. You only collect everything, you only admit, you only take all the admissions, everything fine, but execution is done by some of the group of people or some of the entities. Okay, so outsourcing is a terminology we use it in our colloquial language to mention some process that you are getting from outside. Suppose you are MRF tire company is there. They need some peripherals, they need some kind of spare parts, some kind of work. They may not do it in their own process. Premises. They will just outsource it. Even IT companies or any companies for that matter, the furniture vendor or furniture manufacturer. Okay, if you outsource some of your activities from outside, it's for outsourcing. Taking the help of small, micro, tiny units. Okay, to get some advantage. If you produce something that will be costing more, if you outsource that, it will be costing less. If that is the case, you may choose to outsource that particular process or particular activity. So that is different. Service industry is nothing but providing some kind of personalized service. The college is a service oriented organization. Okay, hospital, hotel, IT service. There are many. Okay, so any business can be of these three categories or a combination of these three. Some company may do manufacturing as well as buying and selling. I manufacture tire, but one type of tire I'm not manufacturing, but I don't want to lose a customer also. You will come and ask for 3-4 varieties of tires. I am producing only 3. The fourth one I'm not producing. Since it is very less market or I don't find profitable, producing that tire. I just outsource it, not outsource it. I'm just buying it, stock it. Along with my own product, I stock the other product also I buy, I keep it. So I'm doing both manufacturing as well as merchandising. Okay. Suppose you are a car manufacturing company, you may have your own showroom. You may have your own brand as well as maybe others' brand. That time you are manufacturing as well as merchandising. You are doing both the business. If you find the customers are getting for some services for your car as well as the car what you are selling from other brands, then you can open one service center also. So we are having service business also. Category of business nature. Then you come to another point. I'll come to that. Next point, that is, there are different forms of owning a business. The three what I told you is activities, business activities. Another one is, how do you own that business? How do you own it? There are different forms of ownership. Anybody knows about it? Have you heard about the ownership of a business? Family owned business. Family owned business is not the point what you're talking here. Of course, family owned business is the term what you're using. Myself, my son, both are owning a business. You can call it as a family owned business. But legal point of view, there is nothing called family owned business. Okay, so we have some categories, some kind of legal forms of business ownership. Okay, LLP, proprietorship.
LLC.
1 second. Joint. There is nothing called joint venture in this context. TCS and Infosys joining together and starting a new venture. That new venture will have one name. That name or that new venture, new business activity. That new activity should be of in any one of the form. TCS is a limited liability company, right? Anybody is working in TCS? Many of you may be working in limited liability companies. Limited liability companies. Okay. And then another one is telling LLP, limited liability partnership. Partnership. Okay. Sole proprietorship. The very basic form of business ownership is sole proprietorship. Only one owner will be there. He contributes money. He does everything. Of course, he may have some his employees, or he may borrow money from bank or other sources. That's okay. But the entire money what he is having, he will contribute. Okay, that is called sole proprietorship. Second one is partnership. So myself, my friend joining together, or myself and my spouse joining together. You can call it as a family business outside, but for law, it is partnership. If you have made the business in such a way that as a partnership, the partnership. Third one, Hindu undivided family. Please don't confuse the word family business and HUF. HUF is a legal status for a business organization if there is an ancestral property undivided among the members of the family and there is a business. In very few parts of India, even today, we have this kind of business. Okay, and Hindu undivided family form of business ownership. Fourth one is cooperative form of business ownership. Cooperative. Basic, you have to learn this. Because we are going to study about accounting. The accounting takes its different color, likely changing from one to another based on these forms of ownership. So you should know what type of business it is, what ownership of this business is. It is. Then only we can just read the data correctly. And again, law also takes different style, different description based on these forms of ownership. Okay, last one is joint stock company. I repeat, sole proprietorship, partnership, into undivided family, cooperative form of business organization. Last one is joint stock companies. Okay, so somebody told LLP, where it comes under? It comes under partnership. Partnership is a very common term. Okay, wherein more than one joining together and forming a business ownership. Partnership. Okay. There are so many partnerships available. We'll study one by one. Just will come back to this description of the course plan. Then we can discuss about it. As of now, we keep this in mind. There are 5 forms of ownership, broadly. There are 3 ways of doing business, 3 models of doing business, 3 economic activities of doing business: service, trading, manufacturing. If you are a trader, you may be a sole proprietor, or you may be a partnership, or you may be a HUF, or you may be a cooperative firm, or you may be a joint stock company. Okay, just keep this pause for some time. Let us finish this description, then we'll start discussing this. Okay, is it fine? So look at this objectives of accounting. So when I talk about objective, I'm talking about financial accounting. Okay, next one, users of accounting information. Who are all going to use the accounting information? What are those accounting information? Basic concepts and conventions of accounting. These are nothing but the framework according to which or upon which or based on which the accounting theory is formed or theory is formulated. The guidelines what we are getting to prepare accounts. That's called concepts and conventions. Then the improved form of concepts and convention is GAAP. Generally accepted accounting principles. Discuss about that. If any discipline, any subject, you should have some framework. You should have some rules and regulations. So those rules and regulations are given by these principles, concepts, conventions, GAAP, and all. Next one, accounting standard. The next version of GAAP is, the next version of principle is accounting standards. First, we ourselves set some principle. We follow this custom. Based on some custom, we evolve certain process to be followed. Over a period of time, if we follow, that becomes a law. The principle what accountants should follow, prescribed by law, is called standards. Each and every country will have its own accounting standards. In India, we have accounting standards called Indian Accounting Standards, IAS. Okay, there is an organization called Institute of Chartered Accountant of India. It is entrusted with the duties and responsibilities and powers of formulating accounting standards in India. It will every now and then oversee the accounting standards available in India. If anything is required to change, it will change and notify it in the official format. We will discuss later. We will come to the particular concept. The next one, international level, is called IFRS. Now, India follows one accounting standard. England follows one accounting standard. Pakistan is following another accounting standard. If that is the case, Now we are living in a globalized economy. You as an investor can invest in any companies. Foreigner can come and invest in any Indian companies. When you compare two companies, can you tell me Indian companies and foreign companies in the same industry? Tata and Infosys, both are Indian companies, no? One Indian company, Tata Power. Any other power company international level? Foreign company? Or more, you can take Tata Motors. Then it is, right? Tata Motors is Indian company. Yeah, another company is in foreign countries. You take an example, car company. Okay, these two car companies are there in front of you. You want to invest in any one of the two car companies. When you compare the data from Tata Motors and from another car company from foreign country, if these two data should reflect the same logic. Simple example, your mark and another person who is studying in another university is mark. If you are going to compare and decide who is the best or who is better student, who is performing better. If you want to decide, the logic should be same. You should also have the same kind of assessment, the same kind of exercise of evaluating the educational system or what we studied. If it is different, the comparison becomes illogical. Okay, the decision what we are going to take may not be logical. So to make uniform throughout the world, across the countries, we have one system that is called International Financial Reporting Standards, IFRS. Okay, India also follows this IFRS, but we call it as IND-AS. We don't just follow. IFRS is framed by international accounting body. Okay, except US, many of the countries are following. Okay, US, they have US GAAP. Previously, we used to follow the US accounting standard only. If you want to go abroad, if you want to go beyond Indian boundaries, Indian companies used to convert their accounting statements into based on the US standards. That was the US accepted standard. But now people are not converting that into US standard. We are converting according to. I am not even converting. We just follow. Why do we do two work? One, I prepare according to Indian standard. Another one, I prepare according to Pakistan standard or European standard or American standard. Whenever I go to that country, I will convert. It was the practice. But now, all the accountants in the world joined together and they formed a policy called IFRS. We prepare according to this format only. Okay, that's called International Financial Reporting Standard. International Financial Reporting Standards. Okay. We don't just follow, we don't just imitate, we just take it. IFRS we take, Indian accounting body will take IFRS, read, understand, interpret, and frame based on Indian requirements. So that converged form of IFRS that is adopted in India is called as IND-AS. Indian form of IFRS is called as IND-AS. That will be notified to all the companies that they have to follow. Okay. Then double entry bookkeeping system, that is called the basic system of accounting. How do we make the recording of transactions in the books of accounts? Okay, double entry bookkeeping system. Then accounting equation, I'll talk about this later. Capital and revenue receipts and expenditures. Then there's a concept called depreciation. We'll talk about it later. Okay. Depreciation, then accounting mechanism, how the accounting process is there one after another, sequential process, step-by-step approach. The very basic record what we maintain in accounts is journal. The very next record is ledger. Third stage is trial balance. So these are all internal records. We study about this a little later. Finally, internal records are prepared. Okay, from this we have this introduction to accounting. Now, internally, records are prepared up to this. The next chapter is talking about from the internal records, how do we prepare some statements that can be given to or that can be used by many of the accounting information users. The owner should use this. Owner should know what is it, no? Okay, what is the basic objective of accounting, you think? Why do we need accounting? Become? They also become? No, basic thing is cost management. Cost management. In accounting, how do you manage costs, sir? Accounting, we say three accounting, right? Management accounting, cost accounting, and we keep that two aside. Now I'm talking about only financial accounting. The cost accounting objective is cost management. It's not of the financial accounting. When I say accounting, I'm talking about which accounting? Financial accounting only. Without any prefix, if I say accounting, that refers to financial accounting. If I want to refer cost accounting, I'll say fully cost accounting or costing. If you want to say management accounting, you'll say fully management. Okay, so what is the objective of accounting?
Perform the day-to-day transactions or record the day-to-day transactions in a systematic manner of
What should become? Okay, no problem. These three we can keep it. These three are okay. We'll take one by one. Financial position, profit or loss, recording transaction. Yes, sir. Financial management. What is financial management?
All the transactions and all the financial related information.
Financial management is altogether academically a separate domain, separate course altogether in academics. But in reality, the outcome of financial management is the process of accounting. Financial management involves three aspects. For any business, it may be a sole trading business, it may be a partnership, it may be HUF, it may be a cooperative firm, it may be a joint stock company. Okay, any firm, or it may be a trading business, merchandising business, or service business. Anything, no problem. It involves three things. Managing of three things is called as financial management. What is that three things? One is, how do you arrange money for your business? How do you arrange money for your business? That is called technically financing decision. Another one is, after you arrange money, how do you invest that money into your business? You want a car, are you buying a car or are you renting a car? You want a building, are you buying it, or constructing it, or leasing it out, or renting it out? So it's called investment decision of a business, not about individual. The third one is, after you sourcing money, after you invest your resources into some of the assets, you do some business activity that will result in some revenue. Profit, revenue, profit. In accounting, profit. It will result in some profit. How are you going to manage the profit? That's called dividend decision or profit management. Put together the science that talks about these three things of a business activity, business organization is called as financial management. Financial management refers to a science which deals with financing decision, investing decision, and dividend decision. Okay, if you take any decision in these any three category, that will result in accounting. Accounting is a sub-component or sub-activity of finance. If you take finance as a finance is one of the functional areas of management, accounting comes under finance. You know, management is nothing but group of a collection of different functional areas of management. Finance, HR, system, operations, marketing. These five broader functional areas of management is there in any business. Maybe the quantum or degree may be high, less, depending upon the model of business. Labor intensive business will have more HR activities. Okay, operations will be less. Okay, so if you take any decision in these three areas, that will result in accounting process. Suppose you decide to take loan. What is it? Loan is something but coming under? Loan is coming under which category? Financing category. Financing category. That's not a subject matter of accounting, but since that's the one I'm just explaining. Okay, that will result in some of the flow of activity in accounting. So accounting is not for financial management. Sorry, financial management is not about accounting, but accounting is helping to record those things that are happening in. If you say financial management, that's everything in the business. You do anything and everything that's coming under financial management. Okay. So any other objective accounting? Do you think any other objective? Since they told three things, we take the three. What is first point you told?
To know the financial position.
What is, so how many of you here understanding what he's saying? We will decode that. Decoding is important. What do you mean by? To know everybody understands, right? English letter, English word. What is another one? Technically, you are doing something, two words. To know the
Financial position.
financial position. Can you guess? What can be called as financial position? Suppose you are asking your friend, you are going for a foreign trip, can you join us? Immediately, what will you reply?
Budget.
Budget. Okay, what's the budget? Okay. So I tell you 3 lakhs budget. Then what will you reply? Thank you. Next, come on. That is the word I am expecting. Thank you. Happy journey. Okay. Happy trip. More than that, come to finance. Come to our discussion. That's very social. Hi. What is that? Not in condition. So you are not feeling well, so you are not going. My financial condition is not good as of now, so please carry on. I'm sorry. Thank you for inviting me. Reply. So what do you mean by that? Forget about all those words. Take the 2 words. What are the 2 words? My financial condition. What do you mean by that? What do you mean by the financial condition? Correct? Worth, okay. Anybody? Correct worth. You come across these words in your life. So sorry, my financial condition is very bad now. So I'm not joining. Or I'm not interested for this.
Free cash flow,
Sorry, sir.
free cash flow.
You're working in accounts department. Free cash flow will come later. All those things, technical terms. Okay. Free cash flow. Okay. Financial condition is not free cash flow.
It is like,
Forget about accounting. Forget about management. Forget about MBA. Be like a layman.
Free cash flow is, in the sense, what currently I have the money with me.
Okay. Okay. Available. Money available. Okay. That is a common language. So that everybody can understand. Okay. Free cash flow. Then I would ask you, say there's something called free opposite concept. Free opposite? Huh? Right. Okay. So whatever is cash flow is a technical term, right? Free cash flow something. Now we are doing something. Okay. What is that? My current cash availability. If I have 3 lakhs at my disposal, at my surplus, at my expenditure, I can just join with you on a trip. So my financial position is not in favor for this trip, so I'm not joining. Any other interpretation for financial position?
Balance sheet.
Huh?
yes, bank balance.
Overall balance.
Overall balance. That's what I believe.
Balance sheet.
Balance sheet. Will you go more into accounting? Okay. Forget about it.
Insufficient funds.
We'll come to that 2 minutes later. Yes, sir.
Insufficient funds.
Say
Insufficient funds.
insufficient funds. I have only 1 lakh. You are asking
2 lakhs.
3 lakhs. 2 lakh is insufficient. So my financial position is not favor for this. So what is financial position now? How do you define this?
Financial position shows whether the company is running at a profit or.
Jumping into the company.
Yeah.
Sure. Trip.
The shortage of funds.
Shortage of fund is financial position. Surplus of fund is not financial position. Yeah. What is financial position? How do you define financial position? Afford trip or not is result of financial position. Correct? The result. What is financial position? How do I define the financial position?
My incomes and expenditures.
Okay.
Whatever my commitments, and up to that, up to spending the commitment, whatever the money.
My income is 1 lakh. My expenditure is 60,000. What else? 40,000 is
Surplus. That is
Surplus.
free cash.
so sticking with free cash flow.
Sorry, available fund.
Available fund. 40,000 rupees. I am in surplus.
Savings.
That is savings. Surplus leads to savings. Savings leads to
Investment.
investment. Another study. Come back to the savings. Okay, what we try to say about financial position? What is financial position there? Is there 40,000 is the financial position? No, then what? Anybody? Just guess. Engineers, please guess. Non-commerce. Yes, sir.
Able to bear the expenses for that person.
Unable to bear the expenses for the certain.
Because it is not within the.
That is the result of financial position now. Because I don't have 3 lakhs, I have only 1 lakh, I am not able to join. True, very true. But that is the result. Then what is the financial position?
Decision maker.
Sorry?
Decision maker.
Decision maker. Decision maker is called as financial position. Yeah, financial position is a concept. Decision maker is a person. How do you equate a person with a concept?
Ability of a person to carry out a transaction, financial transaction.
Fair enough. Ability of a person to carry out a particular financial transaction. Better. Anybody? Little more better. That is a
Valuation. Valuation.
valuation. Okay. What do you mean by that? Valuation is equal to financial position?
An asset on.
Valuation is the tool or is the process that is going to show your financial position. If I don't know what is my financial position, I can approach a valuer. Right, please come. Value my financial position. Tell me what is my financial position. So valuation is a process through which, if you don't know about your financial position, can come to know about your financial position, right? So what is financial position? That I accept. So now, here. Anybody? Come to a company now. Come to a company. If you take a business, what would be a financial position? Some companies will tell, or you will say, this company's financial position is not good. This company's financial position is better. Good. We say like that, no? So on what basis we are saying the financial position is good or bad? If you don't know about what is financial position, we cannot say good or bad. If you don't know what it is, you cannot say it is good or bad. Please think.
Company goodwill.
Company goodwill. Okay. Suppose a company is having a super goodwill, huge amount of goodwill. That company is having good financial position. Okay, is thinking it like that. Yes, sir. Revenue generation. Revenue generation will lead to a better revenue generation will lead to better financial position. But revenue generation is not the what is financial position?
So if the liabilities are more than the
You
asset.
are a commerce student? Yes. Okay, we will disclose this. Yes, sir. Please go ahead.
If the liabilities are more than the asset, value, then the financial the company is not. The asset is more than the liability values, then they are at the good companies.
Is logic very able to understand? Many of you, if you are not able to understand 2 words, what he is using, you have to define the 2 words. He is making a statement. That statement is in English, it is easy to understand for all of us. We can understand, even memorize, we can repeat it. If asset of a business organization is more than the liability of that particular business on that particular point in time, then that company, that business is having a good financial. If it is other way around, that company, that business is not having a good financial position. I can understand this statement. Now we have to seek in define what is asset and what is liability.
Asset means, for example, the land is an asset, it increases the value of the financial, car is a liability.
What is liability?
Yes, it decreases, the value.
It is asset.
Car is an asset. He is having 2 cars. Both of which 10 lakh and another one is 5 lakhs. He's thinking that 50 lakhs is having asset.
But, the upcoming days, the depreciation will apply to the car value will be.
On fine day, all of us, okay, for that we cannot think now. What is now? What is now? Car is asset. Okay, land is an asset, car is an asset. We have to define what is asset. He is telling example for asset. If we define what is asset, then we can understand whether car is asset or liability. Okay, what he is thinking is, because of individual point of view is thinking, having a building, I can get a rent. Having a car, I have to put fuel every day. So it's kind of liability as thinking. But in different point of view, it may be correct. But in accounting, it is not so. Okay, what is asset then? Okay, before defining asset, let us have one question now. Financial position to know about the financial position of business, the basic objective of accounting. From there we started. Right? We understood what is the objective. Second, we are understanding what it is. Financial position is nothing but something relating to assets and liability. That's what it is. Something relating to assets and liability. So now I have to understand what is asset, what is liability. What is asset?
The asset is a property of company which has the amount more than 5,000.
More than 5,000.
Total.
I have 10 or 1 lakh shares. All shares are valued only 3,000 rupees. So it's not asset.
Anything tangible or intangible that adds value to
Why do you say tangible and intangible?
because that's
Anything only you find now. If you want to bring only one thing, then you can say anything which is tangible, anything which is intangible. But any both, no. Then why do you say both?
both are different.
Anything is asset.
Anything that adds value to
Tangibility and intangibility you forget. Because you're including both, no. If you're including both, why should be confuse us? Anything
adds value.
that
Adds value to
adds or that has,
adds.
it will be better. Which has well, anything, look at the word, anything which has monetary value, owned by the business, expected to generate some revenue. There only you are adding values coming. It is not just adding value. How do you use it? That is giving you how much value it can add to your business. Correct. So asset is nothing but anything which has some monetary value, owned and controlled by the business, with an expectation of generating some revenue to the business. Is called as assets. Will you agree? Understandable? Now we will define an asset or not. Any property, any property, anything. Okay, the property, what I'm doing, and it will be very common term, anything. Okay, just value. Okay, right. The national highway is there, or this metro flyover is there. Is it asset? Asset, not for us, for the metro, because it's not owned by. It has value, but not owned by us. Okay, so property, any property, okay, car, motor vehicle, truck, land, building, stock, furniture, bank balance, cash, hot cash. All these things are the example for. Okay. Now the term is there. What is liability?
It's say the expenditures.
Expenditure is synonymous to liability? No. Expenditure is different from the unpaid expenditure will result in liability. Unpaid expenditure. Westcom bill is coming on first. Within 10 you have to pay. 11th onwards, if you did not pay the bill, that becomes liability. Up to 10th, it is not liability. Up to 10th, it is the unpaid expenditure. That's all. Okay, what is it? Liability. How do you define liability?
Which goes to others.
That's simple words. We use simple words.
It is not owned by the company.
Then, if it is not owned by the company, why do you worry about that? That word you can borrow. That word you can just use it. No, very nice. So can you repeat that? Yeah, what the value what the business owes to others. Simple English. The value what the business owes to others. In a similar manner, you can tell asset also. Asset is something what is owned by us. Asset means what we own. What we own. Simple. What we own. Liability means what we owe. Owe means what? Payable. Liable to pay. Liable to settle in future. We might have taken that value earlier with the promise that I'm going to give you in the future. You are going to a bank and asking for 10 lakhs loan. You are getting granted. The 10 lakh loan, what you are getting is a liability. The money what you borrow from your friend for your business, it's a loan, it's a liability. Unpaid expenditure becomes liability. So liability and asset. Financial position is nothing but studying about. There is one more term into this that is called equity. Assets, liabilities, and equity. What is equity? The owner's claim in the business is called equity. Liability is the outsider's claim in the business. Suppose my business today, my business total value of my business is 1 crore. The total asset owned by my business is 1 crore. That's what value of the business, right? 1 crore. Out of this 1 crore, I have a car, I have a land, I have a building, I have some machine, I have some furniture. All put together is 1 crore. Total value of my assets of my business is 1 crore. Comprising of many components of assets. All right. I have made 25 lakh rupees loan from Canara Bank to make all these things. 25 lakhs rupees I have taken loan from Canara Bank. Remaining 75 lakhs I myself contributed. Who am I? Owner. The owner himself contributed to the business. So 75 lakhs owner contributed, 25 lakhs taken from a bank as a loan, which is coming under the broader category of liability. These two put together created the asset of the company of 1 crore. So financial position is nothing but studying about assets, liabilities, and equity. What is equity? Equity is nothing but the owner's claim in the business. Suppose today the business is closed. All the assets of 1 crore can be sold. How much you have to pay to the bank? 25 lakh. Remaining how much is expected to have be there in the business after the business is closed? 75 lakh. Who is going to take the 75 lakh? That is the book value of owner's claim in the business is called as equity. Some author may just say it's a capital. Some book they may call it as just capital. But better word is equity. Okay. So financial position is nothing but assets, liabilities, and equity. If you bring this in equation, look at that. There's a word called accounting. Equation, the previous one. What is accounting equation? This is what accounting equation. What is this? At any given point in time, for any business for that matter, the total book value of assets should be exactly equal to the sum of the total value of liabilities and the total value of equity. Please write down the equation. Asset is equal to liabilities plus equity. Okay. We will discuss further about this. Okay. One more objective we told now. Profit, somebody told profit. What is that? To know the profit of the business. Somebody told. Who told? Yeah, what is that? No, Nice. So assets and liabilities, something but profit or loss.
Is the expenses or the income whatever we have listed.
Don't confuse the asset and the income. Asset and liability are different. Okay, income and expenditure are. Okay, profit. Anybody better way of defining what is profit? He is claiming that sir, accounting, another objective is to know the profit or loss. Profit or loss is nothing but financial performance. Financial performance is nothing but profit or loss. Either profit or loss. So second objective of accounting is to know the financial performance. Only one word is different. To know the financial position. Second one is to know the financial performance. What is performance? Performance is nothing but either profit or can you define profit? Sorry, sir?
Benefit to the
Benefit to the company, okay.
profit is something, income, excess of income or expenditure.
Excellent. Simple. You cannot hold it. Excess of income over expenditure. Something you don't know, my income is 1 lakh, my expenditure is 6,000, my saving is 40 for an individual. If it is the same thing for a company, for a business organization, how much the business has earned during a particular period of time. To earn that income of X amount, how much the company has spent. The difference between these two. There will be mismatch. Either like this or like this. Okay, that mismatch is quantified into number. That number can be a positive number or negative number. If it is a positive number, profit. If it is a negative number, it is loss. The excess of income over expenditure is profit. The excess of expenditure over income is loss. So objective of accounting is to measure that. Whether my company, whether my business is having profit or not. If profit, how much? If loss, how much? That is why we call it as accounting is a measurement discipline. It is measuring. In the first objective, what was measured? The value of asset is measured. The value of liability was measured. The value of equity was measured. Here it is income was measured, like expenditure was measured. The outcome of these two is either profit or loss, and after being measured, quantified, made into a number. Okay, you might be seeing in the newspaper, no? TCS or Infosys, this much of profit in this quarter. Right? First quarter, this much crore is the profit. How they know? Through count. That's objective. Two objectives. Now, these two objectives are achieved by preparing some statement. That statement only is coming under in the second module. Look at this. Financial statement of companies. I told you 5 organizations, right? Now we are ignoring the 4 organizations. We are talking about only one organization. What is that organization? Company form of organization, joint stock companies. What is joint stock company? I may say joint stock company, but it's colloquially you may call it as limited liability companies. Limited liability companies. No, limited liability companies. Infosys, HDFC, Tata Power, any business organization whose name is ending with LTD, Limited. Tata Consultancy Services Limited. Okay, you are working with company? Company. Okay, that's also a limited company. Sir, any company you are working for? Private limited. That's also a limited liability company. In limited liability company, you have 2 types: private limited companies, public limited companies. What's the difference between these two? Private is owned by private. So, TCS is the private limited company or public limited company? You are not telling my answer. Private limited or public limited?
Private limited.
No. It is a public limited.
Any company listed on stock exchange.
Not necessarily to be.
Shareholders.
Yes.
Not necessarily to be. Usually, any company which is listed in stock exchange is called as public limited company. True to a certain extent. But all public limited companies are not listed companies. Okay, let us talk about this for 1 minute. Any business organization name is ending with a word called limited. That's called joint stock companies. Joint stock company. Simply colloquial company. Other things are not companies. We may say that I have a company. The company may be a proprietorship, partnership, maybe. In our colloquial term, we use like that. I have my company in Jigni. That need not to be really a company for law. You can use a business unit, you can call it as a company for your own purpose. But normally it is called firm. Okay, firm. Legally it is not company. When it is called company, when you register your business organization under Indian Companies Act 2013, then only it becomes a joint stock company or simply company or corporation. Corporation. Incorporation. Okay. All those names will end with limited if you register under Indian Companies Act. Then, who is registering, they'll ask you want to be a private limited company or a public limited company. What's the difference between these two? The shareholders of the private limited company are not allowed to sell their equity share, to sell their ownership in the business to anybody else without the permission of the other fellow shareholders. If you are allowed to do so, you become public company. Today, you can buy TCS equity share. You can buy SBI equity share. You can buy HDFC's equity share. You can buy the ownership of any of these companies. So it is called public limited. The shares of the companies are freely tradable in the market. The ownership of a company can be sold to anybody without the knowledge of the fellow owners. It's called public limited. If it is not allowed, you are called private limited. Okay, sir, where I can go and sell? Suppose I have 1,000 shares in Infosys, 1,000 equity shares in Infosys. I want to sell. Company permits me. No need of coming to me. You can go to anybody. You can transfer your ownership to anybody for the price what you are both are agreeing upon. Where I can go? I cannot find the people who wants to buy Infosys. For that purpose, Infosys will have a agreement with the stock exchanges. That's called listed. When you have an agreement with stock exchange, you are becoming listed company. So all listed companies are public limited companies. But all public limited companies need not to be a. There is one company called Oil Limited. It has only 200 members. It does not want to list in the stock exchange. But it is allowing its members to sell their equity shares to anybody. But where to sell, that you can decide. You are not allowed to sell it to the stock market, I mean stock exchange, because you don't have agreement with them. So unlisted companies also can be a public company. But all private limited companies are unlisted companies. All private companies are unlisted. All unlisted companies need not to be private limited. They also can be a public limited. Okay, simple understanding. Yes, sir.
For example, certain companies they're not listed in Indian stock market, still they're called private limited.
Okay. Now, I'm just telling you, private company will not be listed in any stock exchange. Even it is an Indian company, it won't get listed in stock exchange if it is a private limited. Why it is not getting listed in stock exchanges? The basic objective of listing is for what? Allowing my members to go and trade in their stock in the exchange. But I myself is restricting my shareholder to do that. So I will go and list myself in the stock exchange. And that's the process. So all private limited companies are unlisted. Okay. Now I come to your point, what you guys will be in conclusion. That is owned by government, owned by private. Reliance Industry Limited is a public limited company as per our definition. You can confuse why government is not owning, one is owning, not one is owning. That is called sector, private sector, public sector. Private sector. Put a second again. Can any of you do me small favor, that office people, are doing that something. Okay, just inform them. All right. So that's not sector, government sector and private sector. Government sector can be otherwise called as public sector. SBI is a public sector company, as well as. Yeah. All the same now. Why you are doing as well as means another one, as well as public limited company. Reserve Bank of India is a government company, public limited company, but it is not a public limited company. Can you buy the equity share of the RBI? ONGC is a company. ONGC is a public sector company, as well as listed company. The public limited company. Limited and sector are different. Limited is regarding your changing of ownership. Sector is about who controls the majority stake in the company. SBI is a government company because 51%, more than 51% of the entire equity is controlled by or owned by government. Government. That is why it's called government sector company or government company or public sector company. Is it clear? Okay. So all these presentation of your liability, asset, equity, income, expenditure, profit or loss is going to be done in a statement. That statement is going to be studied in this particular unit with reference to only joint stock companies, limited liability companies. It's a private or public, no matter. For us, it no matter. Only companies. Okay, according to Indian Companies Act 2013, any company as registered in India, about that we are going to study. How they prepare this to, I think it's coming, log in, I mean, session expired and log in again. Log in, huh? I should check with the online people. Log in only. Okay. Can anyone respond from online? Can you hear me?
Yes, sir.
Yes, sir.
Yes,
Right. All right. So, in second module, we are going to study about how do we achieve the objectives of accounting. Okay, by preparing two statements. Somebody told balance sheet right there. Okay, so assets, liabilities, equities are going to be measured and displayed in one statement. That statement is called as balance sheet in accounting. Balance sheet. Okay. Assets are always equal to sum of liabilities and equities. Okay, that is going to be depicted in one statement on table. That table is called a balance sheet. Another one is measuring the performance, profit or loss, comparing income with expenditure and trying to know what is excess. If income is excess, profit. If expense is excess, that is called loss. This is going to be done in a statement. That statement is called as statement of profit and loss. Statement of profit and loss. So the output of financial accounting is only these two statements. The output. Through these two statements, you are achieving the objective of accounting. Somebody told here, recording of business transactions. We cannot know what is the liability at the end of the day. Every day something is happening. Financial management, something is happening every day. Buying, selling, borrowing, repaying, okay, paying salary. Many activities are happening in the day-to-day basis in a business organization based on the volume of that business. More or less increase or decrease. But something is happening. We can't remember all those things on a particular day. Okay, so we prepare these two statements at the end of the year. For 1 year, we prepare this. At least for 1 year, you have to prepare. You can prepare earlier that also. Time interval can be less. Sir, I want to prepare every month. You can do. 3 months once, of course, you can do. 6 months, anything you can do. But at least once in a year, you have to prepare it. So that you can know what is your position, what is your performance. Okay. So I can't remember all those things happen in the 365 days to make myself to prepare these two statements on a particular day. So in order to make me to remember all these things, I keep some records. That is why I'm telling to record the financial transactions. Also one of the objective of accounting. Okay, it's not a basic objective. Basic objective is two. To substantiate that, to facilitate that two, we have this recording. Okay, so recording, knowing the profit and loss, knowing the financial position, and then these three are not enough. You know what the benefit out of that. You have to inform to the needy people. You as an accountant know that. But it is not for you, it is for whom? It is for the owner, it is for the government, it is for many other people who are interested in that information. So to make the accounting information available to needy people. That's the fourth objective. Okay. So these two are like this. Then third module is about management accounting. Now we recorded the business transactions. We come to know what is the financial position. We come to know what is the financial performance. And we also made those information available to everybody, those who need it. After that, whether the information is giving some signal for me or not, I have to analyze. You've done something. So what you have done is good, or you can do little more better, or you've done bad. Why you've done bad? Why you are just doing good? Why can't you do little more better? All those things need to be analyzed. Such analysis is happening in the management accounting. That comes under third module. Look at the title: Analysis of Financial Statements. What are the two statements? Profit and loss account or account. Statement of profit and loss. Another one is balance sheet. Balance sheet gives me the financial position of the company. Profit and loss account gives me the profit or loss of the company. Okay. Now I have so many data in these two statements. All those data I'm taking, applying some logic, and I'm analyzing it to know the deeper understanding of the business. To know the lacuna of the business, to know which is the better area of the business, to know the weakness of the business, and also to help the business to do some corrective actions in the next year. So that is called management accounting. That's coming under analysis and interpretation of financial statements. Introduction, meaning of statement, need for analysis, then tools for analysis. We have a lot of tools. One of such important tools is ratio analysis. Ratio analysis. So that is in the third module. Fourth module is about another tool for analyzing the financial statement, that is called cash flow analysis. Cash flow analysis. Cash flow analysis also published in the annual report of the company. Okay, please understand. Each and every listed companies, in particular, each and every registered companies in general should publish their statements of accounts in the public domain. Public limited company definitely should publish their statement of profit and loss account and balance sheet along with cash flow statement in the public domain. In the newspaper, you have to publish. In their website, it should be there. In the annual report, it should be there. Each and every company will give annual report to their shareholders. In that, these three things will be there: profit and loss account, balance sheet, and the cash flow. But academically speaking, cash flow statement is the outcome of one of the tools of financial statement analysis. That is cash flow analysis. That will result in a statement that's called cash flow statement. But in practice, if you download the annual report of any companies, listed companies in India, you will find cash flow statement also along with payment account and balance. Okay. But it's actually a tool. Next one, cost accounting. You remember third branches of accounting I told you, that is called cost accounting. Cost accounting deals with ascertainment of cost and control over cost. Before you start the production, you have to estimate the cost. During the production, you have to ascertain the cost. After the production, you have to analyze whether the estimated cost and actual cost are similar or different. What is the difference? I want to produce one chair. I estimate the cost of production is 300 rupees. 250 only is the real cost. I should not be happy. I have to analyze. Why? 300 was the estimated one. Actual one is only 250. Did I estimate too much? Or I have compromised something quality on my production process? Or really from the cost, labor cost has come down. That's the reason. So these kind of aspects are going to be dealt in one particular branch of accounting. It's called cost accounting. Introduction to costing, meaning and definition, branches of costing. Yeah, costing, and then methods and techniques of costing, cost sheet, preparation of cost sheet, and we are having a lot of things in cost accounting, but we are concerned about only two. One is cost sheet, another one is CVP analysis. Before you start your production, how many units you have to sell? You have to plan in order to reach out the break even. Regarding that, we are going to study in the last page. Okay, so this is about the blueprint of your syllabus or what we are going to execute in this particular semester or trimester. Okay. Any doubt in this? I mean, syllabus? Anything you want to ask? Somebody raised and I told wait for some time. You? Yeah.
So regarding this public limited company.
Okay.
even Infosys of TCS sometimes in public England. But the percentage of shareholders, the stakeholders remains 51%, is again rise with the owners of the right.
What about the rest of them? They are also owners now.
They are also.
I also want to-
Majority of the stake is bought by
Promoters. What is the word? Promoters. We're asking, I think that you are not understanding this question, no? Suppose 100 is the share number, 100 shares are there in Infosys, total number of shares 100. He's asking, should the promoter family, should the promoter necessarily to have more than 50%, 51%, at least 51% to control the company? Not necessary. You take an example. Purely academics, not politics. Okay? Purely academics. Okay. Now BJP is in power. If we take the vote share of BJP, how much in the last election? Is it more than 51? If it is more than 51, 543 seats will be with them. Is it more than 51? No. Democracy is not like you should have more than 51. Democracy is you should have majority. Why people will have 51 means if everybody is joining together, then I lose my company. Now this gentleman, he was trying to do that. He was trying to do that. 9%, 10, up to 10% he acquired before itself. Okay, later he was revealing the fact that I want to buy. One small Twitter was going on like that. From that he got some idea. He wanted to buy. Now he is winning or losing. We don't know. Who is the winner in this deal? Huh? Who is winner?
That Elon Musk is pricing better.
Huh? What? Okay. In the deal, those day existing Twitter was winning, or Elon Musk has been won. The deal was connected for whom? Yeah, that's why he fired everybody. Huh? As soon as he charged. Okay, they filed a case actually. He was stepping up. He offered a huge amount of money for Twitter. Okay, later he realized his friends and advisors, concept is called investment bankers. They are advised him, you are offering too much. Then he was about to step back. They did not give him. Okay, agreement is done, so you have to follow the agreement. They filed a case. Finally, it was outside the court. It was going in favor of Twitter. So they all advised him, so you wait for verdict. That is outside the court. They were just doing it. What I'm telling is hostile takeover. This concept called hostile takeover. Mindtree and L&T.
Yes.
Mindtree was about to taken over by L&T those days, from 1-2 years back. Mindtree was a very good company. Okay, L&T was having an eye on this Mindtree. L&T was, I'm not wrong, it's L&T only. It is trying to buy the Mindtree. Mindtree is not ready to sell. The promoters are not ready to sell. What L&T was doing is acquiring shares from the market. That's called a hostile takeover. I am not ready to sell myself to you, but you are forcefully acquiring me. How it is possible? I have only 21% share in the company. Remaining 79 is with the scattered people around the world. Now L&T is catching all those people, but it's a little difficult. Going and tapping the small investors. But L&T was offering, if the market price is only 200, it's offering 300 rupees. Then who is not going to give? All the small investors who are having Mindtree shares will offer to L&T. Then one fine day, it will take some time, but in one fine day, L&T, Mindtree will become the L&T school. It has become a. Yes. It has become. So that is called hostile takeover. If you don't want this kind of trouble, you should have. If you are very sure that your company is not that great, somebody will just trying on your company and trying to forcefully snatch from you. Then it is many of the companies will not have 51%. Promoters will not have 51, 20, 25. 25 is more than enough to control. 75% is scattered. So I vote for Congress, you vote for JDS, you vote for somebody else. Like that is going on. Okay. What is scattered? Only 1% getting 20% vote or 30% vote can win the election. That's right. Anything else? It's out of syllabus. But anyway, Understand? Yeah.
What type of business is INC? So like.
Which one?
INC, so the ownership, Apple INC.
Apple Inc.
Yeah.
Okay. But INC is a common term, no?
Yeah, so we have.
INC is not a company, right?
No, it's not a company.
Apple INC.
Yeah.
Apple Inc.
Right.
Infosys Inc. So it's a company. Company.
That's not within the Indian ownership.
You can see, in India, we operate in a private limited company format.
Sure.
A public limited company can open its subsidiary in the name of private limited. Company can start a subsidiary. Suppose if any company comes to India, they have to follow Indian rules and regulations. So for that, they will open one company, register one company in Indian Companies Act. It is easy for them to register under private limited. So many companies are there in India. In a private limited form, foreign companies. Okay. That's altogether different subject matter. You can learn later. Now come to accounting. What's the time now? What's the time for break? What's the time? 10:15 only? 52. So it's a time for break. So 10 minutes we can break. You can come back and we can start with the first. Okay, thank you.
So this IFRS, governed by,
IFRS?
governed by body.
International Accounting Standard Board. International Accounting Standard Board. Okay, those are online. There is a 10 minutes break. After that, we can resume the class. Two assignments. I'll announce that as soon as the break is over. You may be. I just tell some information about the assignment. They told that we have to do the first class itself. I tell you, then you can start. We just now studied about the different forms of business ownership, right? That is one question. Okay. What we mean, I mean, the different forms of business ownership. The title of the particular component. You can have 3 questions. 10, 10, 10. All simplified, you can upload. One of them is, out of these 3, one is forms of business ownership. That's the title. What not should be there in this? Introduction. Okay, why do we learn this, or what is the root of this? No, try to correct our introduction. Then, what we mean by ownership? I mean, ownership factor. Meaning of ownership factor. Or forms of ownership. Meaning of forms of ownership. Then, list of forms of ownership. This 5 is there, no? Proprietorship, partnership, HUF, cooperative form, and then joint circle. This 5 list you are giving, list just 1, 2, 3, 4, 5. Then you are going to explain this part one by one with as much as possible information. Basically, what we need meaning of that features or characteristics. Features or characteristics, advantages and disadvantages, and legal perspective. For each and every 5 points, meaning, characteristics and features of sole proprietorship of second one, third one, fourth one, fifth one. One after another. Meaning, characteristics. Then, advantages and disadvantages. Last one is legal perspective. Legal requirement actually. If I want to start a sole proprietorship, what is the legal formality I have to follow? Not much into legal. Okay, of course, connecting with accounting. Okay, is it compulsory for registration or not? Like that. Okay. If it is compulsory for registration, where should I register? That man. Okay. Like this, 5 you are writing. Last one, before you conclude, last one, comparison between the different forms of ownership. A single table you can prepare. Serial number, point of comparison. First form, second form, third form, fourth form, fifth. Clear? Minimum number of numbers. 1, 2, 2, 7, 8. Different points, or at least some 5, 10 points you can make comparison. Then conclusion, references. So this is one component, one part. This is not purely accounting, it's purely background, you should be very clear about, so that you can understand all the subjects of management here. This is not 11th standard, those people will study in the business or commerce classes. Okay, those engineers, how many of you non-commerce, non-accounting? Very few, for most of you are there. So it will be good exercise for you, all of you, to learn these basics. Okay? And one more request for all of you, appeal to all of you, those who have not done accounts so far in your life. Go to NCRT website. You know NCRT, right? Yeah. NCRT, the CBSE Kutsala published by the NCRT website. The same thing only having there. Okay, NCRT website. Or if you are comfortable with your own state board material, you can go to your own state board website. Okay. Download the 11th standard accounting textbook. Accounting textbook. In PDF file it will be available in CRT. It's only, I think it's the same thing. Okay, so you download, read that line by line whenever you're free. Just not reply, just read. Just like a storybook, you read it. And mark whenever you have some issue. That with the terminology used, I don't understand this. Mark down in your notebook or note down in your mobile somewhere, notes, you bring to the class, or you read it in the WhatsApp group, internally you just post it. Anybody can answer, or I will advance. Okay. So please don't keep this only this 180 minutes. 180 minutes? There was, yeah, 180 minutes is enough for your learning. It's just a place where we can get some pointers. We cannot do everything here. Okay, so your effort is required for this facilitation of learning. Otherwise, It is not possible. I can just guide you. I can just tell you what it is. That's all. If you are not asking more questions, then I can just tell whatever is needed in the very beginning level. That's all. So it's two-way, and you have to prepare and talk. Maybe it's not like sitting here and asking some. Most of the my experience is, most of them will ask some question from your experience. Just like that outsourcing business, this controlling, these are not possible. But these are all supporting, these are all some learning, that's all. It's not about exactly core accounting. When you ask more question on core accounting, when you read on accounting. So please read on accounting from this material, NCERT material, 11th standard textbook. No, sir, 11th standard is very low for me. I am a postgraduate. I already done my engineering, BTech or BE. I don't read 11th standard textbook. No problem. You can take any reasonable standard financial accounting textbook, financial accounting textbook, either by Jain and Naran, Javaharlal. So many authors. Financial accounting is a very old stream, old discipline. Many good number of books are there. Many good books are there. Good number of good books are there. You can take any one and you can, but it will be very easy for you to understand. Very elementary level. Anyone is fine. So that is prerequisite for the next class. Read it. Okay. Next. Second component in your assignment. Okay. One question is this. Second one is you are going to start a business. Assume. I will describe and give you in the mess. Just I'm telling you. Okay. You are starting a business. You describe the business. What business it is, either in the service, manufacturing, or trading. But form of ownership is only company. Because we are concerned about only company form of organization. There is no choice for you. Out of the five, the last one is the business ownership. There is no choice. In that, what is the capital you are going to generate? How you are going to start? Everything you are assuming. I will give you some kind of basic concept there. Based on that, you are building. Assuming. And you are assuming some transactions. Suppose a car company, car distributing company, buying cars, selling cars, showroom expense, all these things you are assuming. Or you can talk to anybody, or you can take your own business model also like that, your own company. Okay, you are describing some 50 transactions. What is transaction? Very common term, right? It's accounting term. We use in accounting. What is a transaction?
Activities.
Activities. Activities. Cash. Cash flow. If cash flow is not there, it's not a transaction.
Anything that includes money or this for.
Money only is not a transaction. Money is a transaction. Cash flow is a transaction. But that is not alone transaction. Money is work. What is that, sir? Anything in numbers. So you are getting 40 marks in accounting out of 50. Transaction? Yes? No? Yes or no? Yes. Writing exams is a transaction. Getting mark is a transaction. We are not talking about that. We are talking about transaction that take place in business, which involves transfer of money or money's worth. Okay. Owner brings 1 lakh rupees from his family and starting a business. That's a transaction. Appointing you as a HR manager for the business is a transaction. Not transaction. Payment of salary to HR manager 50,000 rupees. Transaction. Buying raw material from the supplier. Selling goods to the customer. Transaction. Owner is doing a puja in his business place. Transaction? Or not? No. For puja, he has purchased some flowers or any other puja materials. That's all. Firing the accounts manager. Giving incentive to the sales manager. So transaction means any economic activity that take place in the business which involves the transfer of money or monies worth. Buying goods from my supplier without paying cash by giving a promise that you are going to give after 1 month. That is called credit purchase. I'm slowly introducing what called credit purchase. But you are not new to this word. In your bank statement, in SMS, you get a SMS, right? Every 31st of your month or first of the month, or depending upon the culture policy of the company, you get a message. Happiest moment of the month. Your account is credited with some amount. Your final balance is mismatch. Credit. That is legal. But same word you are using here. You are buying from your supplier goods worth rupees 1 lakh, billed rupees 1 lakh. Okay, but you are not giving the money immediately. You are telling, sir, I don't have money right now, I'll give next month. This is called credit transaction. Here, money is not transferred, cash is not flowing. But what is flowing? Money is worth is flowing from the vendor to supplier to you, supplier to the business. One business to another business. This is not transaction. Money is worth is transferred. Okay, so anything which is not taking place through cash or through value settled immediately is called credit transaction. Anything is happening through immediate settlement is called cash transaction. So you have to assume 50 transactions of your own business model. And you have to make some journal, ledger, then trial balance, which I will teach you now. Okay, this is for 20 marks. 20 marks. This is a little technical, 20 marks. That one, first one you are copying. You are just reading from somewhere, you are reproducing in your own way of creativity. That's all. And also format I will give you. Nothing you are doing much. Learning, that's it. So 10 marks, that's 20 marks. Okay, I will update this as a file in your LMS along with the due date. Okay, is it fine? Understandable? Those are online. Are you able to get this assignment concept?
Yes, sir.
Yeah, I'll upload the file also. You can read in the LMS more about this. All right. Now come to the first chapter. Okay, our starting point. I'll be taking your mobile. Go to any one of the companies. Which company? All of us liking any manufacturing company. Tata is not a company.
Nestle.
Tata is a company. Tata is a brand name or a company? Brand name. Which company you want in Tata? Tata Motors. Tata Motors. Okay. I always like Tata Motors. Go to Tata Motors. Go to Tata Motors website. Tata Motors website. Go to financials. Go to financials. Those are online. Please browse for a Tata Motors company website and go to that website. Maybe shareholders or investors. Okay, investors. Investors icon. Go to investors icon. Click that. You will have some financial reports. Annual report. Annual report. Go to annual report. Download the click the annual report of latest year. 21-22 is there? Yes. Click on 21-22 annual report of Tata Motors. If you are going to ask about Tata Motors, you have to ask the Tata Motors only. Don't go to any other company and ask about Tata Motors. Many of you, if I tell you correct data, you will go to Money Control. You will go to Yahoo Finance. All those people we don't want. We go to them only. Whom about you want to correct data? Go to them only. So Tata Motors, we are now in. Go to 2021 annual report. It may be a voluminous book, maybe around 300 pages. So 46 pages. Don't worry about that. We are going to all those things. Whenever you are free, just a glance, you go through. Now, Control F, go to financial statement. Go to balance sheet. Right, you can go to balance sheet. What is the objective of accounting? Objective of financial accounting is forgotten? To know the financial performance, to know the financial position. If you want to know the financial position of the company, we have to refer what? Balance sheet. So go to balance sheet. Go to balance sheet. And also go to statement of profit and loss. Are you able to see? Is it available? Yeah. One of the components of annual report is financial statements. We are not going to do much on that, just read, go to financial statement. Balance sheet, go to balance sheet. What you are finding is the first line in the balance sheet.
Assets.
Is it asset? Is it not equity or liability?
Since current.
Okay, assets. Under that we have so many subcomponents of assets, right? Similarly, after the total of assets, we have equity and liabilities. Okay, equity and liabilities. Under that, we have so many subcomponents of equity and liabilities. Share capital, general reserve, etc. Okay, why I am telling you to refer this? We are going to prepare this only for a company. Okay, we are going to prepare. Similarly, go and refer the profit loss account. Second to that, it will be there. After balance sheet, you will find profit and loss statement of profit and loss. What's the first item in statement of profit and loss? Revenue from operation. Other revenue, other income. Then total income. Then expenses. One by one, they will attack. First expenses, raw material consumed. All of you are able to see the profit loss account. All of you be in the profit loss account page. Under expense column, what's the first item given?
Cost of materials.
Cost of material consumed. After that, change in inventory is there.
Purchases of products.
Okay, purchases. And then change in inventory.
Changes in.
Yeah, change in inventory, employee cost, finance cost, depreciation, other expenses. Okay, so what you are going to understand from this browsing is, from this statement is, we are going to prepare this statement. Suppose, say for example, purchase of stock, second item under expense column. How much is the amount? There are two amount column, right? One is current year, another one is previous year. Normally, companies will have to publish these two statements with two columns. One is for current year, one is for previous year. That's our comparison. But we are going to prepare in the class only one column, only 1 year. If you know for 1 year, you can prepare for any number of years also. No problem. So can you tell me current year what is the purchase in Tata Motors?
5030 crores.
Okay, some amount is there. Some say for example 5,000 crores. Assume 5,000 crore is there. What is this 5,000 crore? Total value of purchase made by Tata Motors from day 1 of that accounting year to last day of that accounting year. What is the day 1 of the accounting year? What is the accounting year? Accounting year means any 12 months. Any 12 months is accounting year. Current year also 12 months. Otherwise, accounting year. We in India nowadays we change to accounting year only 1st April to 31st March. Previously it was optional, but now it is compulsory for all the companies. You have to have 1st April as a starting point, 31st March of the next year as closing date. Okay, accounting period. We cannot keep on prolonging our performance. So I want to perform still. Later you can identify what is my performance. That's no use. You should have some timeline. I teach for 6 months or 3 months. You have to assess what you learned. Otherwise, it's very difficult. So I teach for 6 years, 10 years, then you assess. No use. You cannot understand what is your performance. So know your performance. You have to have some timeline, time period. The time interval is 1 year, April to March. Okay, the amount 5,000 crores or 500 crores or 550 crore, whatever it is, that is the amount of goods purchased during the one accounting year. Similarly, employee expense, how much is there? Employee expense. Employee benefit expenses. Okay, 3,000 crore, around up. 3,000 crore is the amount what they spent on employees for that 1 year. We cannot remember all this money, all this amount, all this value on the last date of the accounting year, which is spent on 1 full year. So for that purpose, we have to make some records. This is outsider information. This can be given to anybody. It is not an internal record prepared by the company, but is published to anybody. Anybody can refer. Even you are a shareholder, not a shareholder, you are not even worried about the companies, you can see. No problem. But it's compulsorily given to whom? Shareholders. Compulsorily given to shareholders. You cannot just publish there and you can go and see. You cannot say. It will come to your email ID. If you are a Tata Motors shareholder, once annual report is finalized, AGM is conducted. After that, immediately, not even AGM conducted. Before AGM conducted, it will come to you along with the notice. So date, AGM is there, annual general meeting. Will come and attend. Along with that, this also will come to your name. Compulsory. Okay. So now, what I'm trying to say from this is, we cannot remember all these informations at the last day. So we have to keep on track on all these things. So we have to create some internal records. One of the internal record is journal. Okay. One of the internal record is journal. Another one is ledger. Next one is trial balance. So for that preparation, we need to understand some of the concepts in accounting. Okay, for that we should understand the meaning of accounting in the beginning. What is accounting now? We discuss so many things now. What is accounting now? Look at this. Is it visible to you? I'm highlighting something. Is it not visible? Is it visible now? Yeah. The process of, look at this, the process of identifying. What to identify? What is transaction you identify? There are many things happening in the business. What is a transaction? We already defined. Anything that happens in the business need to be identified whether it is a business transaction or not. How do I identify? How the poor accountant sitting on corner with one system will understand some transaction took place in the company. How does the accountant know about this? Only one example for transaction. Sorry? Bank statement is a transaction.
Selling of goods.
Bank statement is a paper, no? I'm asking you what is transaction. I'm not asking you. Maybe. How do I come to know bank transaction? Can be from bank statement. Between the business and the bank, what not took place in a particular period of time. That can be known from bank statement. Bank statement is not a transaction. It's helping me to identify the transaction. Tell me one transaction. Selling your goods to customer. The transaction? No. Not complete. It's not giving me complete information. The transaction. Selling out goods to customer. How much? How much is sold? How much? Tell me how much. 1 lakh. He's telling 1 lakh. Have you collected money? Have you collected or not? Tell me. Collected. So collected 1 lakh rupees from customer for goods sold. That's a complete information about the transaction. Collected rupees 1 lakh from Mr. A for the goods sold to him. Right? Transaction. You are telling me. How the accountant will come to know this? Who will sell? In a company, who will sell? Sales manager. Sales team will do that. Who will receive money? Cashier may receive the money. Or directly you may have given the money into your bank account. RTGS, or check, or draft, any such, or Google Pay, whatever it is. Okay. How the poor accountant comes to know about this?
It is recorded in the.
What is that? Invoice. What is invoice, sir? Bill. Colloquially, it is called bill. Accounting point of view, it is called invoice. What is invoice? A document that describes the item sold with the party name to whom sold, with the date on which it is sold, the amount for which it is sold, all the terms and conditions are the same. It's called invoice. There are two invoices: cash invoice, credit invoice. If it's a cash invoice, it becomes a receipt also. Even the credit invoice is a credit sales. Goods are sold per credit. So the credit invoice or cash invoice will be popping up in the system of accountant in today's world. Those days, that invoice will be taken physically and will be given to accountant by office boy from sales department to accounts department. There will be a link through a particular person, messenger, clerk, or attender. One clerk to another clerk, attender will helping there. Nowadays, in ERP, okay, sales department is making sales, immediately invoice is created means it will automatically pop up in the system of a clerk who is in charge of that particular recording process. Okay, so documents are there to make you to understand what is the transaction taking place. Rent paid, how do you know? Rent receipt. Donation given, receipt. Salary given. Pay slip is the evidence. I can create 100 pay slip. No, Satya has created 10,000 pay slip. You know, anybody from Tech Mahindra now? Anybody here working in Tech Mahindra? Satya has been Tech Mahindra, right? Mahindra purchase it. 10,000 salary slip for many years Satyam has created. Is it a evidence? No. What is evidence? Acquaintance. But nowadays we are not signing in acquaintance. Only pay slip you are having it. Bank credit is evidence. Bank credit. Our account debited, the employee account is credited. That is the evidence. So every transaction has its own objective evidence document. So from the document you have to identify whether there is a business transaction or not. After identifying, you have to measure what it is. What is the measuring? We have 5 components so far we discussed. Do you remember? Asset, liabilities, equity, income, expenditure. Accounts is about these 5 only, nothing more than that. You say anything that should revolve around any one of these 5. Okay, income and expenditure results in profit or loss. If you want to include that also, then 6th item. Profit or loss, 6th one. Okay, so you have to measure now from the document, you are identifying whether it is a business transaction or not. After identifying whether it is a business transaction or not, you are mentioning whether it is income or expenditure or asset or equity or liability. You are measuring how much, what it is. Salary paid 20,000, what it is? Salary paid 20,000, what it is? Delivery liability. Expense. In expense. Okay. Rent paid. Building purchased. Is it not expenditure?
Something.
But then expenditure or not? No, it is not expenditure. What is that?
But it will also come
It's
to.
expenditure or not? So not it is, it's income.
Is an asset because it will be added value to the company. That is later.
That is later.
Will be later.
Is it expenditure or not? Okay. If you accept that as an expenditure, it will take you to the next. First, you accept that. Expenditure can be of 2 types. Expenditure can be of 2 types. One is revenue expenditure, another one is capital expenditure. Revenue expenditure is a day-to-day expenditure. Capital expenditure is resulting in creation of fixed asset. We are introducing one more term. What is called? Fixed asset. We know what is asset. We defined the before break. What is asset? Okay. Now it's fixed asset. What is fixed asset? Any asset which is going to be used by the company for a longer period of time. The intention of buying and holding it is not for purpose of selling. For the water bottle company, the water bottle is in the canteen. I bought this water bottle. I was paying some time to prepare for the water bottles. For them, it is asset or not? Stock. Asset. Is it asset? Okay. Is it current asset or fixed asset?
Current asset.
Why? It is not kept there for the purpose of improving their capacity of earning. It's kept there for selling. The purpose of buying this water bottle by the canteen from the vendor of this water bottle is to sell this to the customer. If that is the case, it's called revenue expenditure. Revenue expenditure results in current assets. 9 rupees canteen has paid for supply of this water bottle. 9 rupees is expenditure. Paid 9 rupees to buy water bottle. Expenditure. Revenue expenditure. It's resulting in current assets. Okay. Same canteen owner purchased by spending 10,000 rupees a table, dining table. Dining table he purchased. That is expenditure. Yes. That is not kept there in the canteen for selling, to make the customer sit and eat. It is increasing the income earning capacity of the snacks. That's called capital expenditure. That creates fixed assets. So capital expenditure creates fixed assets. Okay. So expenditure, two types, capital expenditure, revenue expenditure. So we have to identify, then you have to measure what it is, whether it is asset or liability or income or expenditure. If it is income, what type of income? Again, income also can be two types. Revenue receipt, capital receipt. Raising money from a bank as a loan is a receipt. The receipt is a capital receipt. What is capital receipt? You have to repay it. Collecting money from your customer, revenue receipt. Day to day, you are selling something, you are collecting money. That's called revenue receipt. Okay, so you have to identify, then you have to measure like this, and you have to communicate economic information. After measuring, you have to inform the needy people what has happened in the business, profit or loss. What is asset or liability? What is it? That's called accounting. I summarize it. So accounting is the process of identifying, measuring, and communicating economic information to permit informed judgment. To permit the people to take informed judgment. Informed judgments and decisions by the users of accounts. Okay, this one simple definition of accounting. Okay. So if you take the process of accounting means first one, recording. Okay, and then classifying. Recording means after taking place the transaction, recording in the proper books of accounts. We learn how to record. Okay, now under the theory, recording is happening. Then classifying. What is classifying? Grouping. Expenditure separately. Then only we have that equation. No, we can have that equation. Income minus expenditure. I can keep on recording everything. After recording, you have to classify what is what, whether it is income or expenditure or asset. So that I can have the equation. Classifying. Then summarizing. You classified 10 items under expense. Total the expenditure. 10 items are there: individual rent, commission, interest, etc. etc. 10 items are there as what? Expenditure. Total the expenditure. Summarizing. Okay. Summarizing. Then analyzing what has happened in different aspect of heads of account. Okay, we have to analyze. Then interpret. What has happened? Why it has happened? Okay, interpreting. And then last one is communicating such information to the needy people. So this is the process of accounting, or the steps involved in counting. Okay, something evolution of accounting. Just one line I'm telling you. In 14th century, we just onwards we just followed this present form of accounting called double entry bookkeeping system of accounting. From 14th century in Italy, the person called Luca Pacioli, he just invented the concept of double entry bookkeeping. From there, still we follow the same thing. Okay, we'll discuss about that little later when we come to double entry bookkeeping of journalizing. Okay. Next one, objectives we already discussed, right? What is that objective? Recording of business transaction, ascertainment of result. What is result? I told you another word. What is that? Performance. Result nothing but performance. Next one, ascertainment of financial position. Then providing information for the users. Last one is to know the solvency position. It's not required. Solvency position can be known in the financial position only. What is solvency? Science student, solvent means what? Science solvency. Same thing here also, but it's about business solvency. Somebody told in the morning, no, 5,000 rupees some amount. That comes here. Okay. If anybody who is not able to repay his debt at least of 500 rupees, he is said to be insolvent. Asset is less than the liability. My total amount available with me is 2 lakhs, but my loan payable, repayable is more than 2 lakhs. I am said to be insolvent. Okay, that can be known from the financial position itself. Good financial position means solvent. Very poor financial position leading to insolvency. Okay. So that is the objective of accounting. 5 objectives or 4 objectives you can keep. The 5th one you can ignore. Okay. Functions. Okay. Next one is bookkeeping. Bookkeeping is nothing but the basic elementary aspect of accounting. Recording of business transaction is called as bookkeeping. Those days you have to keep the records in the book. That's why it's called bookkeeping. Till even in computer also, it's called bookkeeping only. Okay, this is very important. Users of accounting information, who are all interested in knowing about our accounting informations. Okay, who are all maybe? Stakeholder, then first is over. Huh? There is one answer. Who is controlling bank in India? Government. Who is controlling insurance in India? Government. Who is controlling college in India? Government. Government is a full answer for. Then there is no further discussion. Stakeholder includes everybody now. Who is stakeholder? Anyone who is having any interest in anything is called stakeholder of that thing. Yeah. Who are the stakeholders now? I accept with you. Stakeholders are interested in knowing about accounting information of a business. Now we list out the stakeholders.
Investors.
Again, investor is very broader term, right? Investor. Who is investor? Shareholder is one of the investor. Shareholder will be only in company form of organization. Shareholder. Okay. Then investor. Another investor. Are they not shareholders? Okay, owner, promoter, shareholder. Internal shareholder, external shareholder. Okay, owner, promoters, and public. Customers. We will finish this investor. Investor, under investor, you have 3 categories now: promoter, co-promoters, other than promoters, equity shareholder. Okay, 3. Then any other investor? Preference shareholder. Preference. Okay, preference shareholder. There is another concept called preference share. They are hybrid nature. They are not the owner of the company. They just give loan, and also they call themselves as a shareholder. Okay. If you give money to the company in the form of equity share, or the benefit for you can get dividend at the time of profit is there. If company does not earn profit, you will not get any profit, any dividend. Okay, but preference shareholder, what they will say, I don't want much profit from you, I want a fixed profit. But you have to give me first before you give to equity shareholders. That's called preference shareholder. Another type of shareholder, that's all. Others engineers, another type of shareholder. They are having some priority over the equity shareholder. The equity shareholder can be called as ordinary shareholder, common shareholder,
Of the owners.
or equity shareholders. Of course, they are the owners of the company, co-owners of the company. Okay, these people, preference shareholders, are not owners. They are neither owners nor creditors. I'm taking one word called creditor. What is creditor? Creditor means any person to whom you have to pay some money, liability, liable to pay. It's called creditor. Suppose I am borrowing 1 lakh rupees from SBI. SBI becomes my creditor. I am SBI's debtor. 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 Okay. Debtor and creditor. Borrower is called debtor. Lender is called creditor. Okay. Now, I am talking about this. The reason? Stakeholders, investors, preference shareholders. They are neither the owner nor the creditor. They are hybrid in nature. Fixed rate of return to be given to preference shareholders, just like a bank loan.
But why we will not call it a creditor?
Because they are getting dividend from the profit. Loan, if you take, sir, I don't have profit, please don't ask me interest. Nobody will accept. Irrespective of your performance of the business, you have to pay interest. Interest is a charge against profit. Dividend is appropriation of profit. Dividend is an appropriation. If you have profit, one portion of the profit can be given as dividend. If there is no profit, no point of dividend at all. But it is not there in the case of interest and loan. If you borrow loan from anybody, agreeing to pay some rate of interest, irrespective of your business performance, you have to pay that interest. That's what I'm telling you. It's a charge against profit. To the tune of interest, profit will. To the tune of profit, dividend will go up. Okay, that's right. That's why we are calling them as hybrid securities. Okay, so shareholder, equity shareholder, preferred shareholder, promoters, co-promoters, and other shareholders are all called bank. Bank is giving you loan, creditors. Okay, so they are all coming under investor point of view. Okay, next, other stakeholder who may be interested in knowing about the information.
Some institutions like education, it is public, some institutions are
Okay, academics,
some research.
academics, yes. Suppose I'm giving you some. Now I told you to go and refer the Tata Motors balance sheet. Academicians, students, scholars. Academicians, teachers, students, scholars. For their academic purpose, they are interested in knowing about it. Very good. Nothing? Employees of the company. For my bonus, for my salary, for my other welfare activity, employees of the company. Anybody?
Producer. Producer.
Producer means? Film producer. Film producer.
Production house produces returning and something.
You know, read what is, I think it's not right, not in the law. Yes, sir.
Just guess.
Yes, that's what I'm asking some information more.
This is who produces
Producing some,
all the products to the
other business organization. Suppose I am Tata Motors. Government of Tata Motors is Mahindra. So Mahindra is interested in knowing about Tata Motors balance sheet. Yes. Obviously, what you are doing, I want to know. Okay, competitors. That would be a better word. Not producer. Competitors. Okay, then lenders. Before you lend money to somebody, you should know what he is. So, as a bank, as a lender, you are interested in knowing about my financial data. What is my sales, what is my profit, how I perform over a period of time. So that they'll ask you, give me your financial statement for last few years. Good, thanks. Or simply lenders, creditors. Okay. Customers, are we charging good price or not? No, my customer, they may be interested. Customers, authorities. Authority means government, you can understand. Something is clean. What is that? How many of you are understanding that? What is that? Many of them are not understanding. What is that? Huh?
It is listed security.
Stock agency.
Securities.
What is that?
Security.
No. What is SEBI? Stock Exchange Board of India rejected.
Security exchange.
That's what he's telling. I am telling no. What is that? SEBI? Securities Exchange Board of India. One conjunction about something is missing. Securities and Exchange Board of India. Both are having different meaning. It's not for laughing. Both are having different meaning. Securities exchange means your exchange is securities. Securities and Exchange Board of India means securities also controlled. Exchange of securities also controlled. How do you create securities? How do you exchange securities? Both are monitored and controlled by one authority. That authority is Securities and Exchange Board of India. Who is the counterpart of Securities and Exchange Board of India in America? Who is taking the who is doing the same role of SEBI in USA? SEC, Securities and Exchange Commission. Okay, they are doing this job. Okay, fine. So authorities are interested in knowing about my accounting and financial data. Good. Anybody? Third parties. Third party. Third party means? Third party means? Who? Example. Okay. Okay, our vendors, our subcontractors, or from whom we are outsourcing our work. They are also maybe interested in our financial data. Anybody else? Tax authorities, if it is not included in that authority, tax authorities. Then by and large, so that is given here. Look at this: employees, leaders. Okay, leaders, and then leader means they are referring. They are interested to know whether their loan principal and interest will be is wrong. As actually it's lenders. Okay, lenders. Spelling mistake. Lenders, suppliers and creditors, customers, government and their agencies, SEBI, tax authorities, everybody comes there. Okay, and then public, potential investors. I am neither your customer, nor your supplier, nor investor, nothing. I'm no one with your company. I'm outsider. But I also wanted to know about your company so that I can create interest in your company. Okay. So public, the management itself, then students already you told no. So all those people who are interested in accounting information. This is theory question. Okay. Fine. So now we can directly come to the journal. Okay. Before that, you just understand one small concept. The process of accounting, how it is taking place. Actually, there is a slide. How it is. I'll just tell you, try to understand. Transactions are there in one particular point. It's evolving day by day. The transaction comes to books of accounts. Basic books of account is journal. In journal, you have to record one after another chronologically. Suppose in a particular day there are 1,000 transactions taking place in a company. Look, those days, how one person in one book can record all the 1,000 transactions in a single day? Not possible. Only one book. Journal is only single book. Just like your notebook, journal is a book, voluminous book, hardbound book. Those days, only one person can write in a book, right? One can write in page number 3, or one cannot write in page number 5. So people found difficult in maintaining a journal for a large volume of companies. So they invented a system called subsidiary books. What is subsidiary books? They divided the transaction into some categories. So one group of transaction is recorded in one book. Another group of transactions is recorded in another book. Like that, they have some different books, so that different clerks can maintain one subsidiary book. Okay, what are those books? If you are buying goods on credit, you will record in one book. That book is called purchase book. You understand? Transaction can be entered either in journal or in subsidiary. If you are a small business organization, day-to-day activities are very less in number. One can maintain that, means you can go with journal. No, sir, so many transactions are there, one cannot maintain. So you have to go for subsidiary books. Those days. Nowadays, also in computer, we have subsidiary books. Okay. One book is purchase book. Purchase book is given to one clerk. He is called a purchase book clerk. Purchase bookkeeper. Okay, he will keep the book. He will record only purchase of what? Raw material on credit basis. If you are a manufacturing company, if you are a trading company, purchase of stock on credit. Look at the word. That's two conditions. One is it should be a purchase of raw material or merchandise, and it should be on credit basis. If you pay money, you own it. If it is a cash invoice, it never touches. If it is a credit invoice, it touches and like. Yeah, one book. Second book is purchase return book. What is purchase return?
Purchase and return.
Yeah, why? Due to some
Quality issues.
quality issues. Broken, not up to the mark, not up to specification. We buy from the supplier, verify something is not up to the mark, we send it to the same supplier by writing one letter that is called debit note. We write a letter. Because of this reason, this much worth of goods are not acceptable for us, please take it back. That's called debit note. That is prepared in duplicate. One you will keep, one you will send it to the supplier. After verifying all those things, supplier will sign on the note, he will return back to you. Okay, that's called credit note. He will send a note to you. Credit note. This is not purchase, return for us. For him it is
Yes.
Sales return. Okay, we will write it in purchase billing book, separate billing. Okay, then we are selling goods to our customer on credit. Goods on credit, goods. Car company is selling car on good credit. Will be recorded in sales bill, separate book, sales bill. If suppose our customer is returning back some goods because of defectiveness, we write it in a separate book called sales return book. The four books are there. Now, fifth one, cash book. All transactions relating to cash and bank. Cash and bank. I am paying money to my supplier. I am paying salary to my employees. I am paying rent to my landlord. All these things, if it is taking place through check, through account transfer, or through card cash, everything will be recorded in one single book. That book is called cash book. There are three cash books: single column cash book, double column cash book, and a triple column cash book. Triple column cash book enters all bank cash. Hold. Okay, right. Another book. How many are there now? 5. Purchase return, sales return, cash. Sixth one is bills receivable book. Bills receivable book. What is bills receivable book? What is bill? Here the bill is different from that invoice. Bill of exchange, we say one word called bill of exchange. What is bill of exchange? Anybody? I have asked what is bill of exchange. Suppose I am selling goods to you on credit. You are my customer. I am selling 10,000 rupees goods to you. Invoice made 10,000. Credit invoice. Okay. Your credits I will give you after 1 month. I'm okay. But I want some return promise from you. So invoice is there. Invoice you can create from anybody. Invoice who is creating invoice? We only creating invoice. Okay, it is not an evidence for others. It's evidence for you, not for others. You cannot demand that. Suppose I'm creating an invoice on your name. I'm coming and asking you to be. I never purchased from you, you can say. So what I am doing is I'm writing one another document. Okay, and I'm giving to you. You are signing in that another document. Apart from invoice. Okay, that you are signing and giving to me back, and one copy you keep with you. That is called bill of exchange. Bill of exchange is nothing but a negotiable instrument drawn by the seller on the buyer and accepted by the buyer with all the details of the money to be paid and the date to be paid, when to be paid. Okay. Now one copy is with you, one copy is with me. For me, the document is called bills receivable. I am going to receive 1 lakh rupee by keeping this to you, by giving this to you after 1 lakh. So we are going to give you 1 lakh. For me, it is bills. For you, it is bills. Like this, I might have given to my supplier. I might have accepted a bill drawn on me by my supplier when I buy goods on credit basis. So that is to be recorded in a book called bill payable book. It is between me and my customer need to be recorded in a book that is called bills. Yeah, how many are there? This one. 8th one, last one, that is journal only. There are some transactions which cannot be recorded in any one of these 7 subjects. Rare transactions. What happen daily? It will happen once in a while. For that, I am not keeping any separate subsidiary books. I keep only one journal. Just like a journal, but it is called journal proper. Along with subsidiary books, if we maintain journal, the journal is called journal proper. What you record in journal proper? Simple example. Anybody? Sorry? Suspense. You are going to keep it suspense. You are going to tell in the next class. What is suspense? Donations. Received or paid? Paid. How are you paying? Then what is the cash flow share? What is the record in cash flow? I already told you, irrespective of anything. What is the cash book I defined? Cash book is a book which records all the cash and bank transactions, irrespective of the purpose for which it is made. They are giving donation or receiving donation, whatever it is. Suppose you are receiving donation or giving donation in cash, through check, cash.
CSR.
Sorry?
CSR. CSR activities.
What is that?
Corporate sustainability.
What is?
Kind of sustainability, if they're investing on
You know what?
some purpose.
What was? So to be specific now. I'll go to Bangalore. Okay, when you are in Chennai, you can say. After coming to Bangalore, if you're saying I'm going to Bangalore, that is not right now. That is very simple.
For the benefit of tax, they will do.
I understand here. I'm asking what? Student, are you student? Yes. MBA student, EMBA, thanks. That makes more specification. Likewise. What is that? You are creating, you're putting another name for that. CSR can be otherwise called as charity. But charity, nobody is interested to do now. They're going for CSR because company stays 2% of profit should be spent for CSR. Those days, nearby people they are able to donate something, but nowadays, no. Come under CSR because compulsory is there. Something?
Create some goodwill.
I'm not asking why do you do CSR? Why do you do charity? I'm asking what is you are doing? Donating some 1,000 water bottle to government school in Bhuvanali. That could be a charity. CSR. Now, where will I start? 1,000 bottle where it came from? You would have purchased. For them, you would have paid cash. Which book? Cash. Donation. Cash. Correct. Because cash is involved. All right. Next
Is service on credit.
or service and credit. That is sales book only. Right?
We are taking some service and we are paying later. Same way we have. Record it.
Purchase book only, no. You are taking service from somebody, a supplier of service is giving you some service. You are receiving an invoice for credit service. Still, I mean, purchase book. Purchase book. Anything else? Size up? Unidentified transaction. How do we record that? You don't know what size that. How do you record?
When we receive money, we don't know what.
If you receive money, cash flow.
We don't know. Like,
I don't know, irrespective of anything, you receive money, right? Suspense. You only told us suspense receipt. In cash flow. Is it cash or not? Cash. Should go to cash only. Okay.
Any
Miscellaneous.
errors that
Errors,
that was occurred.
again common, right? It's very common. I mean, very, very generic.
So if you can't go back and then edit it.
Okay, rectification entries. Rectification entries should be recorded in general proper, okay? That's unusual. Any other thing? More than this, there are some
Petty cash.
cash. You are not telling cash.
It's a
Penalty you are paying through cash only, no cash.
Sir,
Bad debt. Cash. What you are paying? Suppose you are taking an asset and donating. You are having some old furniture in your company. You are going to use no longer that one. You are donating to nearby ashram or nearby organization. That time you should be recorded in general property. Selling of old assets on credit. Donating old assets. All these things will go to general proper. Opening entries, closing entries, adjustment entries, and then what is told? Errors, replication of error entries, all those. Okay, so this is what subsidiary book it is. After writing in subsidiary books or in journal, if you go to next stage is ledger. In ledger only classification takes place. In journal, we are writing irrespective of the transaction, one after another, we are writing, keep on writing. At least somehow the classification takes place in subsidiary books. Okay, suppose you want to know the total purchase made by your company, the value of total purchase made by your company. Can you refer the purchase book and tell this is the total purchase? Can you know the total purchase from your purchase book? No means why, yes means why.
Credit transaction.
Sorry,
Credit.
only credit purchases are there. If you made any purchase through cash, it is written in cash book. We don't know about that in purchase book. So purchase book total does not give you the total real value of total purchase. Then you have to prepare one ledger account called purchase account. So that is called next stage, ledger account, ledger stage. Ledger only is summarizing and classifying. After ledger, we have to go to one more stage that is called trial balance. Why trial balance is required? To check the arithmetical accuracy. What is meant by arithmetical accuracy? Plus minus mathematical operations are there. No? Whether you done those days all done in manual. So before we proceed with the last stage of the accounting, that is called the preparation of financial statement, your balance sheet and income statement, I mean profit and loss account statement. Before you proceed with that preparation, that's final. Before you go for that, you want to confirm whether all you written is correct or not, true or not. Any error, free or not. You are going for that. That checking is taking place in a stage called trial balance, a statement called trial balance. Here, after trial balance is agreeing, it is giving a signal that yes, whatever you prepared is correct. You can proceed forward. That time you're going for next stage is called preparation of financial statements or preparation of final accounts, which comprises of profit and loss account, or income statement. Balance sheet can be otherwise called as position statement. Balance sheet position is known there only now. P&L account can be otherwise called as income statement. The broader accounting cycle is there, you know. Accounting cycle. Okay. Now next is preparation of journal. Take it again. Journal. How do we prepare journal? Journal. Okay. I'll tell you the format of journal, and then I'll tell you the rules for journal. Then we can prepare one journal. Journal. Okay.
I guess.
Hello, sir. How are you, sir?
No, all fine. I just looked at it, guys. I'll take your class in the next one.
Yeah, they will be waiting.
I just leave my.
Yes. The journal will be having a format like this. Online people are able to see this Excel sheet.
Yes, sir.
The journal will be having a format like this: date, particulars, LF number, ledger folio number, debit amount, credit amount. This is the format of journal. Format of journal. It's actually book. We just take a format. That's all. Is it visible for you, all of you? Are you able to see this now?
Yes, sir. Yes, sir.
Journal of the name of the company. So this is the format of journal. 1 day transaction, individually you have to write it. Okay, one date, one transaction, and then the same date another transaction is there. You have to write this date again here. Okay, suppose 1st April we have a transaction, 1st April 2022. We have to write it here. Same day, if we have one more transaction on 1st April, we have to write in the next line. Next cell. Okay. 1/4/2000 again 22. Suppose there are 10 transactions are there, 10 line, I mean 10 cell, 10 row, you have to fill it. Okay. Journal. The format, just understand the format. Date column, we are writing the date of the transaction, where it took place. Particulars column, we are writing what has taken place. What is the entry for the transaction? We call it entry. Okay, journal entry. Then in the ledger for number column, we write the page number of the ledger in which this particular transaction is going to be posted. The next page is ledger now. Ledger book will be there. Those days, called down book only. In the book, which page number of the ledger book this particular item is found for a cross reference in case then amount for both of the transaction. Okay, this is called journal format, journal of the company name. Okay, how do I make it, sir? What I will write it in the particulars? How much amount I have written debit and credit? For that, we have some rule. That rule is called as double entry bookkeeping rule. Double entry bookkeeping rule. Or simply people will call it as golden rule of accounting. Accounting revolves only about this rule only. If you know this rule, that's all about accounting. Nothing more than accounting can be learned in 6 days or because 6 items are there, so 6 days, one day, one rule. That's about it. Nothing more than that. But it needs some time to understand that what is logic. Before I tell you the rule, you see the balance sheet, you see the P&L account. Finally, we need that only. Income we need, other income we need, total income we need in the P&L account. Similarly, items of asset we need, items of liability we need, items of equity we need. It is taking place over a period of time. Changes, increases, and decreases. All those things are captured in journal. Finally, what it is that is coming in trial balance. Every day taking place that is coming under journal. Okay, finally, what it is that is coming under ledger also, the same thing is going to trial balance also. Okay, so this ledger journal is used for day-to-day recording. Okay, it will give you the total in the journal, in the ledger. How much cash available today? I cannot find out from journal. But what has happened for cash in every day? I can find out from it. What is the cash available today? I can find out only in ledger. How much bank balance available? I will find out only from ledger. Okay. What is the value of assets? I can find out in the ledger. How much you purchased on which date? Journal. Totaling, accumulation, that will not take place in journal. You have 10 buildings. 10 buildings might have purchased in 10 different dates. That will be there in journal. But the total of building value will be in called building account. Summarize, classify. Okay, right. So we have some name of the account. Based on the name of the account, we have to prepare this journal. There are two accounts according to double-entry bookkeeping. One is personal account, another one is impersonal account. Personal account and impersonal account. What is account actually? The financial relationship between two entities can be called as account. That can be classified into two categories: personal as well as impersonal. Personal and impersonal. Okay, personal account and impersonal. What is personal account? Personal account is nothing but any account that is relating to natural person, natural as well as artificial person, artificial. Natural person and artificial person is involved in a particular transaction that is called personal account. Example, you, me, Rajesh, Ravi, Usha, all these are natural persons. So what is artificial person? Entity. Dayananda Sagar University is an example for artificial person. State Bank of India, Infosys, Rajesh Traders, Usha Enterprise. Okay, all these things are artificial persons. So both put together comes under which category? Personal account category. Next, impersonal account. Other than these two, everything is impersonal. Other than natural and artificial person, everything is other than natural and artificial person, everything is impersonal. That we have two categories. Artificial, natural, except these two, all are called as impersonal. Impersonal can be of two types. One is real, another one is nominal. Real and nominal. Real and nominal. Real and nominal. What is real? Real is nothing but anything that is really existing. Anything that is really existing. Building, land, furniture, motor car, vehicle, computer, equipment, stock, cash, tools. All these things are example for real. Really it is existing. We are not naming it. Real time also is the same name. Not only for accounts. The last one is nominal. Nominal means accountant is naming it. For the name's sake, we are naming it. For our own convenience, we are naming it. Example. You are having 20,000 rupees in the morning. Your landlord is coming and giving a receipt. You are giving him 1,000 rupees. What you will account for the 1,000? Rent. Why you are calling it as rent? Because he is a. Suppose he is a association member is coming and asking for a donation. You are giving 1,000 rupees free. That time you are calling it as donation, charity. Say 1,000 rupees. Your employee is coming first before these two people coming in. He is asking, sir, give me my bonus, or give me my salary, give me 1,000 rupees. That time you are calling it as salary, or wage, or bonus, employee benefit cost. So you are naming same money, depending upon the purpose for which you are spending, you are naming it in different names. Those items are called as nominal accounts. Rent account, interest account, commission account, salary account, wage account. All these things are the nominal account. Okay, so the double entry bookkeeping system is giving us some rule for this journal. If the accounts affected in a particular transaction is personal nature, if it is personal account, the rule is okay. Before that, you understand each and every transaction is having two aspects in it. One is benefit giving, another one is benefit receiving. You are giving 10,000 rupees as salary to your employee. What's the benefit you are getting? His time. He is working for you. You've taken the labor from him, effort from him, intellectual from him. For that, you are compensating something called 10,000 rupees. The benefit is given, benefit is taken. These two aspects are recorded in the books of accounts. That is called double entry. Double entry. It is not for one thing we are writing two entries. Entry is only one. Entry is only one, but both the aspect of that is entered. Each and every transaction has twofold effect into it. One is benefit giving, another one is benefit receiving. If you record both the aspects into the books of accounts, that process of accounting, the method of accounting is called as double entry. If you write any one of the aspects, that's called single entry bookkeeping system. But we cannot follow single entry, it's not scientific. Income tax authorities are not accepting that as a record. We are not following, nobody can follow. The companies can follow only WNT. In the entire world, registered companies or any other big, normal, medium company can follow only WNT. We are learning only WNT. Okay. So based on double entry bookkeeping system, personal account rule says that debit the receiver. Thank you, sir. Debit the receiver. Credit the receiver. Next. No. Real account rule. Real account rule says that debit what comes in. Credit what goes out. I'll explain it another 2 minutes. The last one is nominal account. Nominal account rule says that debit all expenses and losses. Credit all income and gains. Okay. So this is the base according to which you have to make journal. Right? Golden rules of accounting or rules of double entry bookkeeping or simply rules of accounting. Okay. It's not just to memorize, you have to understand what it is. If you memorize, you cannot do it. You have to understand. Okay. Now, how do you identify which rule to be applied? Second thing is, should I apply only one rule for one transaction? Not necessary. One transaction may be taking the combination of one rule, debit from one rule, credit may from another rule. Depends upon which account is affected. Simple example, you are paying rent. What are the two accounts, two aspects into it? Cash is going out. We're paying rent, right? Cash going out.
Real.
Cash is real.
Yes.
Real, right? Okay. Why are you paying cash? You've taken the benefit of enjoying the space of the landlord. Landlord is not important. You cannot say that the receiver is landlord. He is not receiving from you. Though physically he is receiving money from you, for accounting company is not receiving anything from you. You are giving some compensation for him for the space used by you of him. Okay. Then what is the important here? Rent is important. What you are paying? Cash. Why are you paying? On account or for some benefit received? Are you paying 10,000 rupees to landlord for the benefit what you received or for on account? On account means what? You are going to get later. What is the truth here? Are you going to receive that 10,000 rupees from the owner later? Or for the benefit what you received? Benefit what you received, you are paying. If benefit what you received, you are paying means the person who is receiving is immaterial. If you are giving it to your friend 10,000 rupees as a loan, that time you did not get any benefit from him. You are going to receive the same amount of 10,000 rupees later. That time the person is important. So in first case, when to pay 10,000 rupees in cash to the landlord. What are the two accounts affected? Rent account is affected. Another one is cash account. The rent account comes under which category? Nominal category. Cash account comes under which category? Real category. Real account says that debit what comes in, anything is coming in, nothing is coming in. Something is going out. So we have to credit what is going out. What is going out? Cash going out. So go to journal. You can write it here. What is going out? Cash. So cash account, how much going out? 10,000 rupees going out. So you write here 10,000 rupees. Credit side 10,000 rupees. Okay. What is to be debited here? Rent is expense. Rent is which account? Nominal account. What is nominal account rule says? Debit all expenses and losses. What expense here? Rent. So we have to debit rent. Rent account debit. Rent account debit. I write DR. I don't write DEBIT. I write only DR. But the amount I write it here. Okay, amount I write it in the debit side 10,000 rupees. Okay, 10,000 rupees. This would be 10,000 rupees. Okay. I have to write one small narration. Being rent paid. For my reference in future, what is the entry for? Okay. This is called journal entry. It's called journal entry. Is it clear? Okay, another case I told you. Pay 10,000 rupees to my friend as a loan. What's the entry now? What are two accounts affected? Personal account. Friend account and cash account. Friend is personal account, cash is real account. According to personal account, the rule. Personal account rule says debit the receiver, credit the giver. So who is the receiver? Friend. What is the friend name? That's why friend account debit. Name of the friend account debit to
Yes.
cash. 10,000 rupees each. Being loan given to friend or F. Okay. Being loan given to clear? You tell me one transaction we'll try now. You assume any business and tell me transaction. Goods sold. Incomplete transaction now.
Goods sold for 10,000.
Goods sold for rupees 10,000. 10,000, 10,000, 10,000. 30,000. Goods sold for 30,000. What are two accounts affected in that? Cash comes in. So cash account is affected. Another one is goods going out. Goods going out. When goods going out, you say sales. Because when goods coming in, also goods. So to differentiate coming in and going out, we use two different words: sales and purchase. So goods going out. If goods are going out, what do you do? Credit what goes up. So cash account debit to goods account. Actually speaking. But sales and income. According to income, nominal account. Sales and nominal account. Goods means real account. Sales means nominal. Okay. Goods coming in, it will sales. Sorry, purchase. Goods going out, it will sales. So names, we are only naming it. Nominal account. So nominal account rule says that credit means income. Credit all income. Sales is that income. Okay, so cash account debited to sales account 30,000 being goods sold for cash. Okay. Any other one? Any other transaction?
Purchase of machinery.
What's the machinery? How much?
For 10,000.
For 10,000. 1 lakh. Machinery is cost 1 lakh. Okay. Purchase machinery for 1 lakh. Entry? Both are real account. Machine real account. Cash real account. There is no importance here for purchase. What is this? Purchase of machine. Who is buying? If you are a manufacturer, you are buying a machine for using it in your business as a manufacturing tool. Suppose you are a machine trader. You are buying machine for what? Keeping it, selling it. One possibility. Another possibility is buying machine, using it for further production process. So this case, it's a fixed asset. This case, it's a current asset. So who is buying? Normally, machine purchase means it's a manufacturing company. Okay, manufacturing company. So entry is machine account debit to cash account or bank account if we give money through check or account transfer. Normally more than 5,000, 25,000. How much? Nobody works in accounts department? Nobody? Yeah, what's the minimum maximum amount you can spend through cash?
10,000.
10,000? Interest good. Okay, more than 10,000 if you spend through cash, income tax department will not allow you to detect that as an expense. To avoid the block transactions. Okay, so you have to pay through check. So if it is machine account debit to bank, online, the machine purchase for check for that. Okay, suppose Fatima Furniture Limited is for purchasing furniture for cash rupees 2 lakhs. What I will do? Fatima Furniture is buying furniture. Sorry? Hey, you are Fatima Furniture, man. There's a company called Fatima Furniture. They are buying furniture from somebody by spending 2 lakh rupees cash. What's the entry? You tell me. Sorry? What's the company name? Fatima Furniture. Fatima Furniture Mart. What they are buying? Why they are buying? What's the entry?
In the books of Fatima.
Yeah, I am asking in the books of Fatima.
It's furniture account debit to.
No. No. How? You cannot write your own name in your own book. That much, at least this one thing you can understand. It's confusing with revenue expenditure with capital.
Books account.
Purchase account debit to bank account or cash account. Why sir it is not furniture account? I mean, not furniture account. Fatima Furniture Mart is buying furniture. What's the purpose maybe? Please the link. For them it is a goods. If it is a goods, you have to say purchase account debit. If it is an asset, which asset you have to say that asset name. Fatima Furniture is buying some computer. Okay? Computer's account debit to cash or bank. If you through check to bank, if you are paying for cash, cash. If you are not paying check or not paying cash also that time, vendor name. What's your say vendor name now? Goods purchased from Ramesh Enterprise for rupees 1 lakh on credit. Entry is purchase account debit to Ramesh Enterprise account. How it is? Based on personal account rule. Credit the giver. Ramesh is giving you goods. So you are crediting him. Debit the expenditure. Debit all expenditure. Purchase and expenditure. That's all. Any other example? Interest paid. How much? 5,000. 5,000. For the entry. Interest is a nominal account. Nominal account rule says debit all expenses. Interest and expense. So interest account debit to interest account debit to cash. Confusing? It should confuse. Otherwise, not as. If you really know, then there is no value. Any other example? Example, not the answer. Question. Cash deposit. Cash deposit where? In bank. Cash deposit in the bank. How much? 800. Okay, we'll forget about amount now. We'll learn only concept. Yeah. Okay, entry. Who is receiving money? Bank is receiving money. Bank is a personal account. Artificial person. So bank account debit. What the rule? Debit the receiver. Who is receiving? Bank. Bank account debit to cash account. Why cash account? Credit what goes out. Real account. cash. Suppose you are having two bank accounts, one in SBI, another one is Canara Bank. That time, if you make only bank account, don't you get confused? So that time you would write name of the bank also, Canara Bank account debit or SBI account debit. Suppose you have two bank accounts in same bank. That time, simple. Account number also debit. 1, 2, 3, 4, 5, 6 in Canara Bank account debit to cash. Drawing money from bank, taking money. In ATM you are taking or going to bank and taking money through withdrawal slip. Just reverse entry. Just reverse. Cash account debit to bank. Debit what comes in. Cash account is coming in, so cash account debit. Credit to the giver. Who is giving? Bank is giving. To bank. Cash to bank. For deposit. Bank to cash for withdrawal. Okay. Anything else? Paid wages. Wage account debit to cash or bank. Any more? 430 or 440? 45. Oh, sorry. So, like already started as common reserve. Okay, so keep thinking about some of the transactions like this. Okay. Some 10 transactions right in count. Journal. The transaction, then journal, which may be helpful for the similar. Yeah. Thank you so much. See you again in the next class. Those are online, any doubt before we leave?
No doubt, sir. Thank you.
Thank you so much. See you in the next class.
Thank you, sir.
Thank you, sir.
Thank you.